Hello everyone, welcome to my channel. My goal is to help people identify quality stocks and help young people all around the world to start to roll their snowball by building their portfolio and achieve FIRE as soon as possible. For our first video, we will be starting with Johnson & Johnson, or JNJ for short. A few days ago, the FDA halted the usage of the JNJ COVID-19 vaccine due to blood clots. This prompted me to start an analysis into the company about its financials and also to see whether the vaccine halt will affect J&J. First, a disclaimer. I am not a financial advisor and whatever I say in the video is for entertainment purposes only. First, J&J is a drug company with a $427 billion market cap, which is massive. I believe that J&J is among the top 10 largest companies in the US, so a really big company. There's a PE ratio of 30, which is a bit overvalued. I personally like stocks with a PE of around 20, but for J&J I believe that it should be around 25, given that it will always be at a premium given its stability. Its dividend yield is at a 2.5% right now, which translates to around $10.6 billion in dividends. Remember this number because we will be using this to determine its dividend health later. Now let's look at its income statement. Now, for their revenue, we can see that their revenue is growing from 81.5 billion to 82.5. Yes, it is very slow, but given the size of J&J, the fact that it is growing is very good. Now we will look at its profit margin. Ideally, it is above 10%, but look, we have a 17.82% margin here, so it is really nice. Now for its profit growth, we can see that its profit growth has shrunk from 15.29 to 14.71 billion in the last 3 years. Now this year, it is 1.3 billion, which is very uncommon. I believe that something has happened here. Maybe it's a lawsuit, maybe it's a write-off, but I haven't done in-depth research into this yet, so I don't know. But the general consensus number should be around 14 to 15 billion. It is declining, but I believe that this decline is actually due to the COVID-19. Now J&J has 3 business segments. Its consumer segment, its pharmaceutical, which is all the drug development segment, and also their medical devices segment. Now their medical devices segment I actually hate because a lot of people opted out of elective surgeries, which is a huge contributor to this segment. So I believe as COVID goes away and as we normalize, the medical devices segment will recover and we'll see a healthier profit growth from J&J. Now we will look at its balance sheet to determine the health of this company. So the first thing we have to look at is its total assets. I mean not total assets, its current assets versus its current liabilities. So for its current assets here we have 51.2 billion, and for total liabilities we have 42.4 billion, which is very nice. It means that they can immediately cover all their current debts or whatever they have to pay off, and they will still have around 10 billion of cash left over to do whatever they want. Now we will also look at its share number because this is very important, as a decreasing share count will mean that over time we are owning more and more of the company, which is what we want. We want to own more and more of the company that we have invested in. So we can see that its shares number went from 2.68 million to 2.32 billion, 2.68 to 2.63, sorry there. Yeah, you can see that it is declining very slowly, so it is better than being increased. A lot of companies, they issue a lot of shares to do acquisitions and whatnot. The fact that it is decreasing, it is a very healthy sign. The longer we hold the company, the bigger of the pie of the company we will get. And now we will go to the cash flow statement. Now what we really want to look at here is the free cash flow. The free cash flow is the money that the company generates from its operations minus its capex or capital expenditure. The capital expenditure is the money required for Johnson & Johnson to keep the lights running. So like factory maintenance and software subscriptions will be examples of capex. Now we minus this from operating cash flow and we will get our free cash flow. And the company can use free cash flow to pay dividends, to buy back shares, or reinvest into the business, whatever they want. The higher the free cash flow number, the better. And we can see that J&J has actually grown their free cash flow from 17.7 billion all the way to 20.18 billion as of today, which is really nice. Now, to determine whether their dividend is sustainable, we will have to compare it with the free cash flow. Now, remember the number that I asked you to memorize just now, which is hold on, let me see, 10.6 billion. Now, this number has to be 80% or less of its free cash flow. If it is not, it is very likely that the company will not be able to sustain its dividend in the long run. Anything happens suddenly, let's say a lawsuit happens, the company will find itself struggling to pay its dividend because of its free cash flow reduction due to unforeseen circumstances. As for J&J, we see that its free cash flow is about 20.2 billion, while its dividend takes up 10.6, so around half, which is a pretty healthy dividend, and we know that at least J&J can sustain this dividend for at least another few years, given that nothing extraordinarily happening. Now for J&J, other than the profit growth slightly declining and the PE being overvalued, the financials of the company is generally really healthy and the company is growing slowly. So now we will address the elephant in the room, which is the J&J vaccine halting. Now, how will it affect J&J stock? I was following the stock after the announcement and the stock dropped almost 2% right after it. But as of the time of making this video, they have already recovered all of their losses from their COVID vaccine halting. And this is why I like J&J stock so much. I've been keeping an eye on J&J stock for around 3 years now, and I've always been amazed by the sheer resiliency of this company. The first time I saw the resiliency was during the opioid crisis. I don't recall it clearly as it was quite some time ago, but J&J and 2 other pharma companies were in the heat of the opioid crisis. There was something announced on the TV and the companies had to pay a fine or something, and the other 2 companies, they tanked 7% each. For J&J, it fell less than 1%. That was when I realized, wow, this is actually a really resilient stock, and the resiliency is crazy because the opioid crisis is actually a very big thing. A lot of pharma companies were hit by it, and it was a very big thing in America. There were a lot of pushbacks and all from the population, and even Donald Trump's wife was involved advocating for the victims of the opioid crisis. So J&J barely fell. That was the first time that I was exposed to this resiliency. The second time was the J&J baby powder potentially being cancer inducing. Now J&J faced a lot of lawsuits, and when the news came out, the stock actually downtrended for a while, but it quickly recovered, which again made me impressed with this. And the baby powder thingy wasn't small. There was a lot of lawsuits that J&J faces, and some of them probably still haunts J&J until today, but well, they have recovered pretty well, and people kind of forgot that this thing ever happened. Now, the third time that this happened was with the vaccine halt. And even with all the emotions of, oh, their vaccine is halting, it actually doesn't really affect J&J that much. Now, so we have here that J&J, has gotten 1 billion from the US government in exchange for 100 million doses of the vaccine. And J&J also predicts that the COVID vaccine would boost its revenues to around 90 billion. But this is just the revenue, because J&J has actually pledged to make their COVID-19 vaccine on a non-for-profit basis during the pandemic. So this will definitely increase its revenue, and looking back at its $82 billion revenue, it would definitely bring it quite a bit. But from an EPS perspective, or earnings per share or earnings perspective, it actually doesn't really matter. because they're not making this to make a lot of money. And ultimately, earnings is actually what we look for in a company rather than the revenue. And actually, I don't like taking into account this COVID-19 vaccine profits uh, when deciding whether I want to invest in J&J anyways, because this is a one-off event and any surprise profit from this should not be accounted for in a long-term portfolio pick, such as what we are doing for J&J. I should also mention that J&J's acquisition of Momenta last year will increase J&J's drug pipeline in autoimmune diseases. The drug pipeline of a company is actually very important. I mean, not a company, for pharmaceutical companies are very important. This is because the future growth of pharma companies really relies on their drug pipelines. As we can see here, J&J has 34 drugs in phase 3 FDA approval in the United States. And if any of these drugs end up being as popular as Humira from AbbVie, it will be huge for J&J as it can be a huge revenue and profit driver. And the approval rates for phase 3 drugs are around 60%. So there's a very good likelihood based on their drug pipelines that J&J can actually continually sustain its growth in the future. Now, would I buy J&J at this price? Probably not. I personally already have J&J in my portfolio and I bought it at 146 US dollars. I would very much prefer it to be at below 150 US dollars for me to buy in. So no, I will not be buying in at this price personally unless something fundamentally changes. But there is no harm in starting a small position first. Every time I find myself, waiting for a stock to become cheaper, but then it just goes higher and higher and higher. So you just buy a small position in so that even if it rises, you won't miss the bus. And if it dips below 150 for Johnson & Johnson, just buy more. J&J won't go anywhere, they won't go bankrupt, at least not within the next 5 years, I think, given their extremely healthy balance sheet. And as I stated before, this is not financial advice. Whatever I say is just my own opinion. And yeah, it's a good and solid company with a decent growth rate for its size and healthy financials. A smidge overvalued, but if it dips below 150, get ready to buy this beauty of a company. If you want more content like this, please like and subscribe. I'll be posting weekly analysis on companies like this to help us find quality companies in our portfolios. Comment on what you think of J&J and whether you own it in your portfolios already. Thanks for watching and I'll see you in the next video. Bye!